All right, we are back and we're live. And it's 10:54 currently. It is Monday, March 9th, 2026. Yeah, first day of the trading week. And I got cooked again. So, I ended up taking two losses today on Nasdaq. So I'm down about another grand on the day, and I literally have about like 950 left before my account goes broke. Um, yeah, okay. So just looking at this off rip, initially I was looking for shorts. Primarily is because we do have this like bearish 4 hour trend here on both Nasdaq and the S&P, right? More specifically, we also have this very obvious sell side liquidity sitting right below us here. Additionally, right, I did see we had this new week opening gap here. Um, I did see we have this new week opening gap here on the S&P and on Nasdaq, but I was hoping that we would maybe fill it in later on in the week sometime. But I guess it looks like we would be filling it today. So I think my off bat my reason I took two losses was because my bias was just wrong. But this is why I was looking for a sell. So for one, at open, I mean pre-market, right? We had this SMT right here, right? So this is around 5 o'clock. So technically we tap into new week opening gap on the S&P. We don't on Nasdaq, right? And on top of that, once again, more importantly, not we have very obvious sales liquidity, and technically we are in a downtrend here. More importantly, looking at this as well, we have no. This is downtrending. I thought we were just going to pull back into the zone, hopefully reject from the zone, and the S&P had already tapped into the week opening gap. Nasdaq hadn't, and so I was hoping that we reject from that zone off rip. Correct. Also, at open, we also did get this SMT in play here. So this was this intermittent high here, which is also here. At open, literally 9:30, we wick into this intermittent 1 hour intermittent high, and we take it out on Nasdaq, but we don't on the S&P. So off that was great signs for me because we manipulated upwards, not downwards. We manipulated upwards, had an SMT play out, and then from there, I was just looking to take my sell entry. Obviously, delivering down towards. I was really targeting London lows more primarily. Um, with this downward liquidity this downward liquidity sitting right here as well. Um, I really liked how these lows were kind of just like stacked down. I wanted to see us to run all these lows, tap into London lows. That was my bias on the day, correct? So actually, let me replay this just so you can see what happened. So those are the first two things off like at open that I was looking for us to do. SMT with new week opening gap. SMT at open with the new with a 1 hour intermittent high, and then obviously draw our drawn liquidity seeing this very obvious swing low down here on S&P and on Nasdaq right here. This very obvious and low, which will be really close to on Nasdaq. Now, with that being said, obviously we chopped around as you guys can see at open, and yeah, I cooked. But I took two trades, and I think the first one was decent. I just messed up in one bit, and then the second one was honestly not that great. So this is basically what happened. So let me just replay real quick. So let me go back to about here. Right, so let's go to the 1 minute, right? Okay, so this is open, right? So at open, as I mentioned earlier, right? At open, we manipulate up. We take out this 1 hour intermittent high. We also tap into the new week opening gap. So that SMT is no longer in play with the new week opening gap, but we do have an SMT still play out with the 1 hour intermittent high. So obviously we take it out here on the Nasdaq, but we don't take it out on the S&P, which I do like. And right after that, right, we do also get this nice displacement back down. So at this point, once we tap into that zone, right, first 5 minutes are over already. I'm looking for us to hopefully begin to show us my confirmation for sales, right? So what I'm looking for at minimum is either a CISD, an IFEG to form, or a BOS. What we end up getting is this CISD with this 5 minute right here, which I do very much like to confirm me for sales, right? My obvious targets are obviously this London low, but we do also have this unmitigated 1 hour right below us as well, right here. You have an unmitigated 1 hour right below us here. And yeah, so once again, at open, we break below this low, right? I mean, not a break low. We form a CISD, a bearish CISD, and to me that confirms me for sells, right? At this point, I zoom in on the 1 minute, right, to look for some form of entry here, correct? So we kind of just do our thing here, do our thing, do our thing. Eventually, we do tap into the unmitigated 1 hour gap here. Still, I don't see any entries for me here. But then after that, we not only get a BOS confirming us, giving more confirmation for my sells here, right here, but we also form a 5-minute gap right here. I'm very confident in the fact that at this point, I'm very confident in the fact that we want to see a sell off. I really like how we had a former SMT here at open, and then we get this nice displacement like here, get a CISD, and then deliver lower. We tap into the unmitigated 1 hour, and then we tap into the 5-minute gap. I'm here at this point looking to hopefully push away from this 5-minute gap, right? So I'm now looking for a 1 or 30-second inversion in this case. So, right, so what we have, we do get this 30-second right here. Let me mark this out. We have an FEG right here. Boom. And then we technically do get this 30-second IFEG form right here. Right here. But because it was so small, I kind of wanted to see a stronger leg push through it. So at this point, I'm basically waiting around, see if we get a stronger push here. This holds so far. We retap into the 5-minute here, and then we get this very nice, strong displacement leg down here. At this point, I do end up taking, I believe, a market order entry right here at this leg, at the high, and I'm very obviously targeting London lows sitting right below us, and I want to see us take out all this trend line liquidity right here very nicely. Most likely, what I was looking to do is break even at the next swing, which would have been here, which is another thing I gotta work on. So this is what ends up happening, right? So what I end up doing, right, is I end up taking a market order entry here. I do believe I go in with 4 contracts, right? I take a market order for 4 contracts. I put my stop loss at the swing high, with tapping into the 5-minute up here, and then I'm targeting right down here London lows. Boom. Right. So at this point, we take an entry, right? I like how we displace lower in this case, right? So we then begin to move downwards, right? Let me go 30-second here. So we got boom, right? Market order entries already, boom, 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 right? So the problem that I think I find is that I find it kind of difficult finding a break even point. So 2 things. So for one, there was this 15-minute unfilled gap right here, which we tap into, right? And then also technically a 5-minute gap here, both unfilled. And I'm ideally I would always want to look for, like, I guess I don't know where break even should be, basically. I don't know where break even should be. So I think that's one thing I need to work on for sure. Trying to find out where my like a mechanical break even point for me, I guess. In this case, we do tap into this 15-minute gap, and I guess technically we would have seen rejection from there. But what my hope was is that if we were truly bearish, we would want to push through that gap, through the 15-minute gap, and away from that zone, right? I would want to see us push away from that zone. Push through the zone and just deliver down, and I would have gone break even at another swing point. In this case, it was a very obvious swing right here. Yeah, my fault. It's right here. Very obvious swing point right here, which I would have gone break even at. It is possible that this could have been a good break even point, but I wouldn't have known that because no, we were bullish on the day anyway. With that being said, I think maybe at this point, or ideally, once we got this, basically. So I think ideally, once we trace back and then we get this push right here and this closure below this low on the 1 minute, we technically do get a BOS below this low right here, right? Which I guess one could argue would be our determining factor. I feel like we should begin to go lower if we are breaking below lows. We should not be wanting to retrace any higher. That's what I was maybe thinking of. I never ended up going for it because I was hoping that we would want to see us tap into some form of liquidity point before reversing or having any potential for reversal. So basically, what I end up doing is I don't break even any point, and basically this chops around. Eventually, we shoot upwards, and no, I get stopped out. Correct. I'm still looking for sells ideally. At this point, only really because I like the wick that we got initially from this zone. I'm still really liking how we're displacing from this zone. At this point, the S&P has a 15-minute gap here form as well. So we formed this 15-minute gap on the S&P, which is also a very small BPR gap right here. We got a very small BPR gap, which I'm hoping that we tap into and deliver away from. As I wait for that, what Nasdaq does is that it traces back into 0.6 to 0.7 of the Fibonacci range right here, right? Get rid of this, get rid of this, get rid of this, right? It traces back into 0.6 to 0.7 of the Fibonacci, right? And we are still technically holding this 4-hour gap here, 3, 2, and 1 minute gap here. I mean, 2, 3, and 4 minute gap here, right? We get a very nice strong displacement, as you guys can see in a minute. You get a very strong displacement like here, right? So ideally, okay, this is the second setup. So the first setup I think was fair. I think the first one was fair. I think it was. I'm not gonna say it was A plus. I don't think it was the most A plus setup I could see. Actually, no. I'm gonna say it was like B plus, maybe A, because I mean I like the displacement from a 5 minute gap. I was looking for sells, 30-second inversion, and then BOS. I should have maybe gone break even after tapping into the 15-minute gap potentially, but I think that one was fine. I think that was like a B plus, A plus, B plus, maybe A setup. This one was maybe like B, honestly. Like actually, no. I think the first one was maybe like A. This was like B, honestly. Um, Only because, well, I did like this displacement, like, so maybe ideally what I should have done, given that we were delivering from this 2/3-4 minute gap here, which I didn't see at open because I was looking at the 1 minute. I didn't like how we trace into the zone and inverse these gaps, but I always forget that there's the 2, 3, and 4 and 5 and 4, 3, 2, 3, and 4 minute gaps as well that also do matter. Um, Also we're still within 0.6 to 0.7 the Fibonacci range. We basically fill in these gaps here on the 4 minute here. This is the largest one of the largest one of the three here. It's not working, but we wick it, we fill it in fully, and then we get this very nice strong displacement leg. And at the same time, we also tap into this 15-minute BPR gap here on the S&P. So we get this very nice strong displacement leg. If I were to look for any entry whatsoever, what I should have done is probably take a market order entry after the this IFEG forms here. So this 5 minute here is irrelevant, but we do get this nice um was stack of 1 minutes inverse. My entry should have been here, probably at the high, um and targeting the same London lows right below us down here. Boom. Right. I don't end up taking an entry only because I initially had not seen that we were still delivering from this 2, 3, 4 minute. Because usually I look at the 1 minute, but I didn't observe the other ones. So in this case, I'm like, we kind of broke below this low. The 30 seconds doesn't have anything supporting it either, so I didn't like the entry. And then I see that the 2, 3, 4 minute are holding a fair value gap is holding it bearish still. So as my second entry, this probably would have been a better entry, a nice also a better fill here with the market order entry. What I end up doing is kind of let this play out. We were pushing back down at this point, right? I did end up getting a little bit of FOMO, right? And before it tapped into this low down here, I wanted to kind of get an entry here. So what I ended up doing is I ended up taking a limit order entry at this 1 minute gap, which was also about to form a 2 minute gap here as well. So I ended up waiting around to take a limit order entry here. RR is worse. It's a 1 to 1.2 RR. This is where the little FOMO comes in. I still think that the whole idea wasn't horrendous, but my fill and my FOMO was not good either. So this is where I take my sell order entry here. I get in. My stop loss sits above this high up here. And then my target, once again, is the London lows right down here with the trailing liquidity in play too. Correct? We got that fill. And at this point, I'm just waiting around. I was looking to, initially, I was looking to take, if I was going to get into this trade, I was looking to take maybe a BPR entry right here. We had a 1 minute BPR right here in play, which generally speaking is a great area to trade off of, right? Nice little BPR right here, which we actually do end up tapping into. So you could argue that we could have displaced from this level here. We get this nice displacement from the BPR, but then eventually we just chop around and then we get stopped out all the way up there. I was really hoping we would deliver lower, but we ended up not doing so. It looks like we were actually aiming for the new week opening gap. I did actually have. I mean, at open, I was. I mean, yeah. During pre-market, I was looking to maybe like be iffy on my buys depending on what happened in initially in the morning. Because what I was also looking at is that we had basically swept this low right here on Nasdaq, and on the S&P we had just filled in this new week opening gap we had right here. Had not been filled in, right? We still had the new week opening gap low here down here, which we wicked into, correct? And on this and in the Nasdaq we took out this internal low, right? But I like looking at the 4 hour for my overall trend. And but I guess I could have considered that as well. And obviously, the new week opening gap tends to be a good draw on liquidity as well. Um, so we ended up drawing higher. I'm pretty sure it probably will show, but um, yeah. But hold up. But yeah, we end up trending higher, pushing higher, higher, higher. As you can see, in this is the current setup right now. It looks. I think we're probably going to tap into the week opening gap high in this case. But yeah, I ended up taking two losses there. I'm not completely upset about it. I just feel like I still need to work on, well, models. Like I can see like where it is that we're maybe trending and such. If I'm wrong, my bias, I don't have a problem with it entirely. What I have a problem with is my risk management. I feel like I could have gone break even at that at the in the first trade and the second trade. The second trade probably would have played out anyway. I mean, we did get technically once again, we did take out these lows here on the S&P, right? But if I'm looking for sells, we would have hit that point on Nasdaq anyway. But obviously the bias was wrong. Once again, which is fine. Ideally I would want to be alongside bias, but I was kind of looking a little confident for sells here, but obviously we ended up not getting that. We actually ended up respecting the 1 minute here. I mean the 1 hour here. The 4 hour did look a little bit bearish, but I guess I never considered the fact that we had actually formed this 4 hour gap right here too, which I didn't peep until now, which actually we do wick into later. Um, right here, we didn't form it here on the SM on Nasdaq, so another to consider. And I think from there, I think we wick into it. This is the 4 hour gap. Actually, yeah, we wick into it, and then we actually begin to displace upwards on the S&P, inversing this 5 minute gap here. And then from there, maybe look for an entry. We have a nice pullback into the 5 minute gap here. And then maybe look 30-second inversion, right? We have a 30-second internal inversion right here. Get an IFEG. And I guess one could have looked for an entry after the inversion, which would have been here. So boom, at the low. Probably break even up here. Maybe targeting these fairly equal highs, but maybe the draw being higher like up here. So actually this looks good for longs, I guess. Two things I should be working on is figuring out a more stable, secure, maybe mechanical model to work with. Maybe also a mechanical break-even point to work with, and also maybe looking at the 10 a.m. candle. I think the 10 a.m. candle probably 10 a.m. candle and 10 a.m. or whatever happens at 10 a.m. the 10 a.m. close. I think I could probably learn a lot more from observing that as well. And in this case, I would have seen that the 4 hour got tapped into, whereas the 4 hour did not get tapped into. The other one, which is not only an SMT with the gap, but also we do push away from the gap pretty strongly here. And yeah, so I got cooked pretty hard today as well. I gotta work a little bit better on these things. If I'm honest, I'm pretty sure I'm gonna be blowing the account sometime soon. But I mean, it is what it is. I just gotta learn backtest more. Probably find a model that suits me a little bit better. I have entries in there and such, but I think today it was just like a little bit of. I mean, I think bias was a little bit wrong here today, which is fine. I'm okay with having those kind of days. But I think maybe it could be a little more observant and such in certain cases, like today. Um, but yeah, maybe find a more mechanical model, more mechanical break even point to at the very least secure break even points, because I would prefer not to lose, and I would rather uh not win anything than lose. So with that being said, it is what it is. I got cooked. I got like a rack left to go. We have CPI coming in on Wednesday, and then we also do have news coming, unemployment claims on Thursday, but hopefully we get better entries this week, but we'll see what happens. With that being said, that is what it is. And yeah, deuces.